April 6th. Welcome to the Haikhuu channel. We just had another interesting day on the stock market. The volatility was unbelievable. The fluctuations from top to bottom were pretty extreme. Of course, it only happened after the minutes of the Federal Reserve were released, and we had a nice pump to the top and then a huge dump that made new lows, and then we came back up to the top and we finished with a decent little rally. But it sure was it was an interesting day. The lower risk range for the week was right at that 445, and this is one of those games that we see happening in the stock market, where the area where the most amount of contracts were going to expire worthless today was right here around that 454 area, and it's where I expected the market to close, but we went much deeper than that today and gave a lot of these bears high hopes and expectations. But of course we greeted that area and finished above it, because again, the goal for the market makers is to try to make as many of these contracts expire worthless. So everything below this expired worthless, and everything above this expired worthless. And then we ended up closing at that 446 area. The sector rotations were very defensive. Utilities, healthcare, real estate, consumer staples, energy finished green, and the sectors that we love, the sectors that we enjoy, which are the financials, technology, and consumer discretionary, they all had very, very bad days, and those sectors closing with over 2% losses. Those are pretty significant losses. But when you have stocks like Apple down over 2%, Microsoft down 3.91, you have Tesla down 5%, Google down over 2.5%, those Nvidia down 7%. Those are significant losses. Those are significant positions for the S&P 500. If you look right here, these are the top 20 weighted positions in the S&P, and the technology in those top 20 were down significantly. Of course, the United Health, the Berkshire B, Johnson Johnson, the Exxons, your safety positions like AbbVie, they were up, and they had nice healthy increases. I would expect to see a small rotation out of the safety positions and back into the high risk areas as the week goes on, because as I keep saying, it is April. It is the most bullish month of the year. We know that the first week of April is always a little slow, but we finish the month with a bang, and we're about to see that. The bottom of the risk range was 445, and that was the 20-day moving average. We went right down to that 20-day moving average and bounced back up and finished at 446.52. We did leave this gap on top. I don't think that we're going to open in that gap tomorrow. I think we're going to gap up tomorrow and open around that 450, 448, 450 range, and leave a little gap right there. You see that happening in other places, like right here, where we gap down, finish with that long wick on the bottom. We typically gap up. It's a normal pattern. It happens. It happened right here. It happened right there. It happened right there. It doesn't always happen. There are times where the next day we end up opening either flat, or we end up having a down day. But the majority of the time, when we have that long wick on the bottom and a gap on top, it means we're going to gap up the next day. So I would expect the basic, this is a basic ABC pattern or lightning bolt. I've heard it referred to a bunch of things. So you have A, B, C, and then we head up, or a lightning bolt. You can see that lightning bolt. So the next logical conclusion is that we come back up, test this range, the 450 range, in the middle of the day, come down a little bit, and then break above it. That's what I see happening. That's what I expect to happen. But like I always say, the market doesn't care what I want. And the weekly candle, we really need to finish with a strong back half of the week, because what you see right here on last week's candle is a rejection candle. We came up to that 75% level, we got rejected, and we came back down to the 50-day moving average on the weekly. If we finish red for the week, then that's a solid rejection, and we could either go, the bulls have more control, the bears have more control if we don't finish with a green week, and we have a long way to go to finish with a green week. So I do expect the next couple of days to be very bullish. The max pain for this Friday on the S&P 500 is at that 455 level, which would put us at a good spot to finish the week. And you have this big wall at 441, but at this point I think I'm going to dismiss that 441 candle, that 441 wall. There's no resistance lines there, there's no support lines there. Every time I look at the max pain, I go back and look at the support and resistance lines, and when you have those support and resistance lines match up with your max pain, that's when you know that level is going to play out pretty good. When you look at the S&P for the daily, and you see that 455, you have here, and here. So that's a good support or resistance line at this point. This is a good resistance line right here. So when you go to max pain, you go to 455, there's your max pain. It's just the way it works out. It lines up more often than not. On the NASDAQ, we had a big gap to start the day. So we started off with a big hole to fill, and we just couldn't do it. We still have a long link doji. We did hit the 20-day moving average, bounced up off that 20-day moving average, and finished, in my opinion, with a nice rally to finish the day. And we want to continue that rally tomorrow off that 20-day moving average. The Russell 2000, it has formed a new channel. And today we reached the bottom of that channel and bounced right off that line. It was textbook perfect right there. Just bounced right off of it. We stopped at that 50-day moving average, so that's our resistance right now. Likely bounce up off of it tomorrow, fill that gap, and then continue to chop through there. We do see improvement in the market overall. The market breadth is rising. We're starting to get to our baseline. You want that market breadth, the amount of stocks over the 200-day moving average, you want that to be around the 50%, and right now we're at 36%. We did get down to that 20-21% level, which is the big red flag, the big time to turn around story. But we haven't really recovered all the way to that 50% level. We're headed there. If you're in the chat and you're playing the algorithm, you know that we're outperforming the market. The chat is having a lot of good plays. The algorithm is destroying the market averages. So come join us, give us a thumbs up if you enjoyed the content. Don't forget to subscribe, and we'll see